Hello, good morning and welcome to ET Now's the newspaper show with me, Varun Hirimat. Like we've been reminding you every single morning, the newspapers are very safe. All rumors, speculation regarding the spread of coronavirus through the newspapers is completely inaccurate. To reassure you, all the staff and personnel at the presses are using the highest sanitary and health protocols. So if you are interested in starting to get your paper delivered again, please go to wantmypaper.com where you can explore the various options available for the same. But with that being said, let's get a move on. We have a lot lined up for you this morning. Let's begin with the top 10 stories, beginning with the fact that the company is on right track to raise funds and also on the rights track. So rights issue is becoming something that more and more companies are opting for post-Reliance's execution of the biggest rights issue in the nation. We'll edge out Chinese gear in 3 to 5 years. That's what Gautam Adani had to say when he spoke out yesterday. NCLT OK's resolution plan for Aircel, if you remember, another telecom company which was, went down a few years ago. Hero beats estimate with lower Q4 PAT fall. So definitely some positive cues coming out of there, but the revenue loss was very large. So we'll see how that counter responds today. Vivek Gambhir quits as Godrej Consumer MD. So that's a key development. He's been with the company for a very long time and he's a very key individual there. June exports show signs of improvement. So as Unlock 1.0 really picks up in pace, our exports are also starting to pick up and the data seems much better than what we saw in April and May. Big names may walk out of 2 Delhi shopping areas. So that's needless for me to add anymore, but do look out for retailers exiting mall complexes and shopping complexes. Realty firms seek government aid to revive sector. So we all know the troubles of the real estate sector. There's no demand, there's too much supply, prices need to correct. We've seen a lot of people advising these builders to liquidate their inventory at cost price or little above. So we'll see what happens there. The government may lift export ban on hydroxychloroquine. So that's again another key development as US, European markets also need that drug. And then Mumbai's doubling rate improves to 23 days. So on the back of the country's cases exploding, Mumbai's cases are tapering off slightly from what we saw at the peak. And now we'll be doubling it every 23 days. So that's the top 10 for this morning. Let's now get you something a little more market oriented. So the market revolves around the fact that the Sensex fell 400 points yesterday. And this was predominantly on, again, slowdown concerns and possibly a slight correction. The Dow retreats after rally and the Nasdaq continues to gain. So in the US markets, you saw the Dow and the S&P kind of cool off yesterday, but the Nasdaq continued to remain in the green. Let's remember the Nasdaq is the tech index. It's dominated by all the technology companies, and that's why that index is staying positive while the others are retracing. Volatility in rupee cools as FIIs return. So that's needless to say, FIIs have been buyers recently, and that's really keeping the markets upbeat. Promoters free up pledged shares as stocks recover. So that's another positive sign. Excuse me, a lot of promoters who had pledged shares, we heard that the lenders were in certain cases selling the shares. We heard that in Future Group. We saw that in a smaller hotel company, Lemon Tree. So now as the prices are recovering, lenders are feeling more secure. And Franklin puts e-voting for 6 funds on hold. So we heard a couple days ago that they were going to vote. Now that vote has been put on hold. So these are the market headlines. Apart from this, do remember that the US Fed will be meeting this week, possibly tomorrow or tonight in the US, and that's going to have a big impact on the markets in the following days. Depends whether they'll do more stimulus or not. Now the top 5 corporate stories for this morning are the fact that PE's auto part majors eye ZF's stake in TVS JV. So, some M&A activity coming out there, so do take a look. Top PE to move court over Flipkart stake sale. So some litigation matters over there, which you should also have a look at. It's in the paper this morning. Tax hikes weigh on liquor sales. So perhaps your liquor sales are taking a bit of a beating on the fact that the taxes have been hiked. Your life companies hit a growth bump again in May. So that's self-explanatory. Do read the paper on that one. And the FM to PSB's focus on MSME outreach. So the finance minister just coming out again and instructing the PSBs to focus on lending to the MSME sector. Now that's basically all the headlines that we had to bring you this morning. Let's now get to our individual stories. So the first one, front page of the paper this morning, unfortunately I can't show it to you. Following Reliance's 53,000 crore rights issue, at least half a dozen companies plan to fundraise through this same mode. So we were just telling you about this earlier. In the past week, entities including Tata Power, Mahindra & Mahindra Finance, PVR, Aditya Birla Fashion, Shriram Transport have either announced or are planning to raise up to 10,000 crore through such offers. And the reason of fundraising is to reduce debt and strengthen the balance sheet following the impact of the COVID-19 disruption. So, like Reliance is deleveraging its balance sheet, now a lot of corporates are coming forward and saying, hey, prices are low, we are cash-rich promoters, we can participate in the rights issue, let's go this way and, raise some money for the company. So quite a good development coming out there. The next story that we'd like to touch base on this morning is the Aircel recovery. So ET reports, now again paper-based, says that NCLT has approved the insolvency resolution plan for Aircel that will see UV Asset Reconstruction Company Limited take over the operations assets. This marks the end of a 2-year process that will likely see one of the lowest recoveries for lenders among major bankruptcy cases in India, reports said. So it's not that it's taken 2 years and it's in the telecom space, but despite everything, there's a very low amount being recovered here. Well, I guess something's better than nothing, and we'll take a positive cue out of that. Next story for this morning, revolving a little bit around the financial offences, and the government is looking to reclassify several offences under the financial sector laws, including bouncing of checks under civil offences rather than criminal ones. This move is set to improve the ease of doing business and unclog the courts. Check bouncing is quite a serious offence. Post this, it will be punishable only by monetary penalties and not jail time. So that's one positive thing coming in. If your check bounces or you have some other financial misdemeanors, you won't be put in jail. There'll be some other repercussions for you. Quickly now, switching gears to pharma, there seems to be a faster nod coming in for clinical trials. And my colleague Pankaj, who's obviously the expert on pharma, is joining in with more details. Good morning, Pankaj. Welcome to the show. Take it away.
Hi, good morning. This is an extension to the story, what we told you yesterday. Now the government has designated a CDSCO, which is called as Central Drug Standard Control Organization, as a first point registration for any clinical trials of all the drugs and vaccines. This is a move which will cut down the time which is needed to approval of vaccination. So currently, any sort of vaccination or drug takes about 12 to 18 months in terms of approval. This can be cut down to as much as about 3 months because of this move. The committee is led by Cabinet Secretary Rajiv Bua, and he will also decide on the setup of a mobile coordination committee to ensure that things within the applications are much more faster and much more better, so that the decision by the regulator can be taken in a better manner. The proposal was cleared by the committee in the first week of June. This is what top officials have told the Economic Times. Probably, this is done because, you need more therapeutic treatment, you need more vaccination treatments, you need more people to be incentivized to go ahead and file for more drugs. And that's one of the key reasons probably this has happened. This is an extension to the story that we did earlier, and now a committee has been formed. And from 12 to 15 months, which is a normal time for any approval after filed, it's could bring this down to about 3 months.
All right, thanks for that, Pankaj. So there you heard it. Seems that the timeline for approval of these drugs might be coming down significantly, and that will make them more quickly available to customers that really need them. Switching gears a little bit, PEs and auto majors. According to an ET report, again, so paper-based, German auto parts giant ZF AG is about to exit its brakes in India. It's profitable 49-51 Indian JV with the TVS Group. The move by ZF is to comply with antitrust laws to complete its $7 billion global merger with listed US truck braking specialist WABCO Holdings. So now this stake will come up for sale essentially because the company has to sell in order to comply with a larger M&A rationale which they have. So PE players, some auto component majors in India might be looking to buy this stake. It'll be interesting to see, who the potential parties are that come up. And it'll be quite a large holding, so might even be shared by a few people. You never know. All right, next story. Tiger Global to move court on denial of tax relief on the Flipkart stake sale. My colleague Chandra is bringing us a report on this. Good morning, Chandra. Take it away.
Hi, Varun. Good morning. So this is an important story because it could have wider implications on the private equity and venture capital ecosystem in India because many funds are registered in Mauritius. So they channel funds from funds registered in Mauritius to startup entities here. Now, a few days ago, what happened was the Authority of Advanced Ruling refused to grant relief over taxability to Tiger Global over its $3.3 billion sale of Flipkart stake to Walmart. Now, this was a transaction that happened 3 years ago. It was probably the biggest exit for the Indian startup ecosystem and really raised the profile of startups here from an exit perspective. Now, because the AAR had refused to grant relief, Tiger Global is now set to drag the Revenue Department to court. They are mulling a writ petition in a higher court for tax relief in this perspective. So we have to really wait and see how this goes. Will it go in Tiger Global's favor or the tax man? And it's a case that's being closely watched by other investors as well, because if Tiger Global has to end up paying a huge tax amount 3 years after a deal, it will send out a negative signal to potential exits and investors because it brings back the whole issue of retrospective tax. Investors also keep saying that, there is so much of policy uncertainty in India. Policies keep changing. Suddenly things keep cropping up. So this will again raise questions about the kind of policy stability that investors enjoy in India. So we really have to wait and see what happens once Tiger Global decides to challenge the AAR decision in the Delhi High Court. This is a case that others will be watching closely as well. ET reports that Tiger has hired Mumbai-based law firm Nishit Desai Associates along with a couple of tax firms to advise it on this issue. Back to you.
All right, Chandra, thank you so much for bringing us the details on that story. And obviously, there's a lot of different angles to consider, so it has to be dealt with a little delicately. Interesting one. Do look out for that in the paper. Now, coming back to how the economy is opening up in Unlock 1.0, the June export data seems to have improved significantly over April and May. Now, if you want to look at the numbers, a 36% drop was seen in May. Now you've seen a 60% pickup in April. 60% drop in April, 36% drop in May, which now seems to be picking up. We don't have the exact percentage figure for June, but it's definitely better than those numbers. There's a spike in the value of various shipments, and the geographies also which are being shipped to are very different. So that's a key indicator for us, and obviously the month's not over, so we don't have the data exactly. But from what's already happened in the first 10 days, you can see that it's significantly higher than April and May. All right. We're now also going to be taking a look at something that's going to keep Godrej Consumer in focus today, as well as the Godrej group of companies. You have MD Vivek Gambhir resigning, citing personal reasons. So, this is not in the regular course of business. Nisaba Godrej will now take on the additional role as the MD from July 1st. But my colleague Vinny's got all the details on this story. So good morning, Vinny. Welcome to the show. Take it away.
Personal reasons that Vivek Gambhir is, stepping down as the MD and CEO from GCPL on 30th June. So, this is coming in as, after a very long time that we are seeing in GCPL, a professional MD is being replaced by a promoter family, that is Nisaba Godrej. So, this could slightly be negative sentiment for investors, as this could be a concern, but as of now, this is only due to personal reasons, is what the press release is saying. Now, Vivek Gambhir has been in GCPL for around 11 years, and, he has been a very remarkable leader as well and has a long tenure with GCPL. In his 11 years, if we go to see in GCPL, the company as well has seen a good growth of around 10x in terms of sales and 10x in terms of profit as well. So, they have seen a good growth there. But in the last couple of years, the company has been facing a lot of issues in the performance, and, revenues, even on international business front, which is accounting to around 45% of the total revenue, has also been quite flattish. These are some of the concerns as well, which the investors will be looking at. But Nisaba Godrej has been, quite an active part in GCPL. She has been involved, very closely with reinventing GCPL, innovations, acquisitions, and, she's been very regular, even on the quarterly con calls of the company. So at the end of the day, and it'll be depending on how Nisaba actually carry forward the company, and mainly obviously the financial performance of the company is also something investors will closely look at. So let's see how this actually pans out today, as well as going ahead for GCPL.
All right, that was Vinny with the latest on Godrej Consumer. It seems like a family member will now be replacing a professional at the helm of things, and we'll see how that pans out for the company. Now, coming back to COVID a little bit, and N95 masks, right? So the prices have seen a huge surge. Approximately 250% is what we're gathering, and this is from the beginning of the year. The price regulator has decided not to cap the price of the masks, as it may disincentivize domestic manufacturing. So that's rightfully said, if you drop the prices of these masks, then less and less people are going to find the appeal in making it, right? And N95 is a little higher quality mask. Earlier, the NPPA, which is the regulator in this case, rolled out a list of subsidized prices of N95 masks, which indeed is 450 to 850% higher than the price paid by the government institution. So, it's a key commodity in the times which we live. We need it, and we're going to have to pay for it. That's the message that's kind of coming across. This was in the Times of India on page 5. Do have a read if you're interested. Let's quickly get you an update of what's happening with India and China. India and China pulled back their troops around 1 to 2 kilometers from 3 out of the 4 confrontation sites along the line of actual control, LAC, which is in eastern Ladakh. Now, this is a really good thing as a confidence-building measure ahead of another round of military talks to begin on Wednesday and Thursday. So we'll also be following that closely, and obviously it's a key geopolitical issue for us. Now let's quickly, just before we wind up, get you the Times of India headlines for this morning. We were running you through the Economic Times up until now. The drop in lockdown breach FIRs against migrants. That's coming in from the Supreme Court. BMC lets shops stay open till 9 p.m. So that's quite interesting. N95 mask prices up 250% in 4 months, but no cap yet, so that we just spoke about. 50 NDRF personnel on Amphen duty test positive. So, some personnel that are just doing their job obviously have contracted the virus. And, monsoon session is likely to be a virtual affair for PARL. That's, obviously the monsoon is going to create a lot of limiting factors, so these meetings are going to have to be virtual. So that's broadly what the Times of India had to say. All right. So now we need to obviously just get you a little market feel. We have Hero Motors Q4 numbers that are coming out today, and it's the major two-wheeler. So we need to know the outcome of that. And my colleague Karanya, who's the auto analyst, is going to walk us through the numbers. Good morning, Karanya. Take it away.
Well, it was a mixed bag really as far as Hero Motors Q4 performance is concerned. But what really is largely disappointing is the margins figure, because already we were factoring in a 200 plus basis point sort of a compression as far as their margin performance is concerned. But they have actually delivered way below that as well, 10.6% versus 13.6%. So quite a bit of a slump and a downtick that they've seen. Profits and revenue, of course, we were expecting to be weak given the volume degrowth and given the BS6 related challenges and BS4 unsold inventory related issues as well. So yeah, I think the biggest issue is is on the margins front. As far as management commentary is concerned, we've not really got an update in the press release about their capacity utilization or production, dealerships, or even rural demand. But what the company and the management has told us is that they've taken measures to save costs, improve productivity, spends, and conserve cash. So that essentially is the big headline, apart from the fact that they've rationalized capex spends for the financial year by half. So that's a big statement coming in from a cash rich and from a huge company like Hero MotoCorp. They've doubled the target for Leap 2 program. They've launched initiatives to improve productivity overheads as well. They're saying right now that they will continue to monitor their plans and their strategies, and they are prepared for further course correction as well. So some cautious sort of a commentary coming in there as far as the management is concerned. They've strengthened their presence in the premium segment, in the scooter segment in the fiscal year gone by. But overall, COVID pandemic is something that has pushed several timelines as far as their future launches and plans are concerned. They are scaling up operations post-lockdown is what they've told us. And also that it's critical that the industry receives supports from all quarters. Do remember Hero MotoCorp's management has earlier also flagged off that government intervention is much needed, and they continue to stay with that.
All right, thanks for that, Karunya. It's time though to get your game face on and get started to explore the wide world of online gaming. In this edition of the COVID Code, Avan Dabash gets us how rising digital infrastructure and rise in immersive gaming content is changing the face of the online gaming industry. Let's listen in.
So you've baked the banana bread, made dalgona coffee, Netflix and chilled. Now what? Before you start anything else, know that a live game of Ludo, Candy Crush and poker awaits. That's right. Get those thumbs clicking and you won't know how the time passes. Gaming is no longer a solo sport. In fact, in these times of isolation, it's the best avenue to connect and socialize with family and friends. Time spent online gaming has drastically increased. And with a global turnover in billions, the scope for growth in the industry is mind-boggling. In fact, online gaming in India is projected to grow faster than the rest of the globe. As per the FICCI EY report, the online gaming segment, which grew 40% to 6,500 crores in calendar year 19, is projected to grow at 43% to 18,700 crores by calendar year 2022. And quarantine is only quickening that pace.
Large number of new gamers are coming online. So, the gamers that were already playing games, especially on the mobile phone, the time spent has increased by maybe 20, 30, 40%. But we are seeing a large surge of people who are coming online to play games for the first time. And I think that's kind of going to have a shift in the industry in terms of the acceleration of gaming growth in India.
The future of gaming knows no boundaries, and there's no dearth of choice. Real money games like Teen Patti, Coin Master, and 8-Ball Pool have seen massive growth, while multiplayer games like Carom and Royal Battle, along with World Cricket Championship, has seen a spike in users. On the other hand, cloud gaming services are set to be the next big thing, with a Netflix-style library of on-demand games. And immersive gaming experiences with augmented reality and virtual reality are going to bring in the next wave.
Online gaming firms are seeing a huge spurt in traffic due to the lack of live entertainment and a lot of time at hand. From shooting zombies to word searches, trivia, and killing enemies, more and more people are spending time and money on their favorite games. So for the online gaming industry, it's game on. Avan Dabash, ET Now.
Well, go get yourself some video games, and maybe that's a good way to pass time during the lockdown as well. But with that, we're completely out of time here in the newspaper show. Thank you so much for tuning in.